cursor flies. Fibonacci lines cut through the lies. Algorithm falter at his stare. While rookies gamble, he's prepared. Risk is locked and the stops are tight. His strategy hunts through the dead of night. Market wizardly. Every trade a prophecy. Stacks his win for all to see. The throne belongs to the market structure trader. Trader. Click, clack, charts attack, candlesticks, they spark the track. Lead move silent, market crack, profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Flipping forex, indices flex, numbers dance. What's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. West fact buzz and traders peep. Lessons deep, no time to sleep. Market's a beast, Lee's got the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads. Fibonacci maps the seeds. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Leads precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy, legends mode. Whoa, 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 whoa. Lead the reason markets run. Lead the reason markets run. Lead the reason markets run.
Morning all. How are you all doing? Happy Friday. It's Friday at last. How are we doing? It's markets have just opened. Let's have a quick look at the DAX. Haven't got edged it up. Sorry, I'm not organised this morning. Right. DAX. There we go. Hello. How is everybody? Is anybody here? Nobody in chat by the looks of things. Gap down this morning on the DAX, 180 points. 188 roughly. So we'll see how we get on with the gap fill today. Opens 9 o'clock Frankfurt. Yeah, sorry. Yeah, it's Frank. Yeah, sorry. Losing the plot this morning. Let me just refresh that. It's open. Why is it saying pre-market? Oh, we haven't had a candle through yet. That's why. That's right. I've had Nick's working on it. Nick's has been doing a little bit of work on the site. He's created a fundamental section basically which does an analysis of all the main leading indicators used by banks and institutions to decide on directional price for FX, basically. So yield differentials, central bank policy, PMIs, CLIs, core inflation targets, all that sort of stuff. And it's basically a scorecarding system, which basically gives you an idea of which way stuff is going to go, basically. So he built this out yesterday. I haven't had a good look at it yet. I'm not sure exactly how useful it's going to be. I got him to put some historical charting in there, but as you can see, it doesn't really change a lot. I'm not sure if it's actually going to be any use whatsoever. But anyway, so he built that yesterday. So, oh, hello. Link back to the dashboard. I have to change that. So yeah, anyway, go and have a look at that if you want to. Morning, everybody. Robert, James, Fire Road. How we doing? How's your oil trade? Yeah, so oil, I took a partial yesterday. I did post it in Discord. So I took partial here yesterday. I couldn't hold it anymore. It was driving me insane. I was watching my P&L. You can see how close it came on Tuesday to taking me out at break even. So that there was, I don't know what that was. That's where I first saw it when I woke up after the gap up, and that was about 65k there. And then I thought, right, okay, huge gap up. And then Trump obviously came out and said, don't worry about it, we'll sort it all out. And it came that close to taking me out. At that point, it was something like 10k. So we've got very close, obviously, to getting out of this at break even. When we actually started to push down, I actually put my stop down to 2.5k. So I thought, I'm not going to let this take me out of break even. I'm happy to take a punt on it, basically, a couple of K. So I pulled it down. It didn't get to break even, so I could have left it where it was. So when we pushed back up the next day, I then moved back up to break even again. And then yesterday, the ride of this thing has been unbelievable. 65k down to virtually break even, back up to 45, I think it was yesterday. So I decided enough's enough. I'm taking half of it. The reason I took it off yesterday, as you can probably see, was the price action. We attempted to make a new high of the day, and we broke up into this propulsion move, which is where Trump announced that he was going to help out with the oil. I think that was where Trump actually announced it here. We pushed up into that propulsion and immediately rejected it. So I was like, nope, if that is going to be market structure short, it's a 50% Fibonacci pullback short, I'm taking it. So I took half, and then 3 hours later it pushed up, attempted a new higher day, but didn't manage to do it. So I thought, fine, I'll leave it overnight. This morning, obviously, we're back off again. So I think it's back up to 27.5k. So yeah, if we can get back up to kind of this area, basically, I'm looking for $200 a barrel, $150 a barrel, some massive amount of dollars a barrel, basically. The $100 a barrel is going to be the key point where the market is either going to let it go or they're going to react and try and hold it. So we'll see what happens when we get, and this is within ADR today, as you can see. So if we can get to attempt an ADR today and attempt that $100 a barrel, I'll see what the P&L says when I get there. At 27.6, I can probably, it's not going to be much more than 30, is it? So I could take another partial today, but I kind of want to hold it for that. It's the trade of the year. In fact, it's the trade of the lifetime, isn't it? This type of trade, the timing on it was perfect. The sizing on it was perfect. Everything was perfect about it, apart from my lack of exit up here, because I was asleep. Basically, this is where I woke up. So I thought, there's no way I'm taking that much of a hit. It had already jumped dramatically. I mean, I was sitting here on the day before looking at it and going, this has got the potential to be the best trade I've ever had, targeting $100 a barrel. Potentially $130 a barrel was my forecast, which was the Ukraine highs. Yeah, you see my targets there. Look, it's already set 130. I had no idea it was going to gap up like that. You know, it's one of those, just timed it perfect. It was lucky. I mean, it wasn't a lucky trade. You know, the trade was taken because I was forecasting it was going to do this because of the conflict. But the way it did it was amazing. So, yeah, this is my year, basically. If this gets back up to there, it's going to be back up to, that's 27. So you're looking at about 60K. That means you're going to bank 80 something off of it, which is an 80% increase. I can take the rest of the year off, in theory. Well, I won't, but yeah, it's brilliant. But still holding, still hoping. You know, that target up here, let me put the risk reward calculator on. There we go. Let's pop that on there. Because that will tell us what the actual profit is going to be. I need to change the inputs on that. The grouping gone. The grouping input. Oh yeah. No. I'm going mad. Where's the input to group? Oh, there. Right, so that there at 130, which is the Ukraine high, is 27 and a half. Is that all? That can't be right, can it? No, it's not 27 and a half. That's wrong. Why is that wrong? I haven't got all the TPs there, obviously. I haven't got all the TPs set. Let's set all the TPs. Hang on. Sorry, I'll look at the DAX in a minute. I'm on a mission now. I want to see what the profit's going to be when we hit the Ukraine highs. That was a stop loss. Can't actually grab these lines because they're too close together. There we go. That's better. So 54K is the target. Be 80K if it gets to 130. But you know, I don't see any reason why we won't beat that at the moment, unless they stop driving this conflict and that straight. If that straight stays shut, $150, $160 a barrel is on the cards, and $160 a barrel when it ticks. See it so far away. God, these lines are doing mad in. Right. $103K. This is a 10 grand account. Not bad profit, is it? Anyway, we will see. We will see where we go. Right, DAX 5-minute range was too small. 10-minute range was too small. 686 minimum we need is 910 for a trade today. So there is your 15-minute range going in bar 3. That is going to be 857. So there's not going to be, as it stands in the next 3.5 minutes, any trades on the 15-minute ORBs today. We're sitting on last week's low, basically, at the moment, which is there. I mean, obviously, the markets are going to be bearish today. That's one good thing about that thing that Nix has built for the fundamentals. He's got a volatility index on there. So this is kind of like your fear and greed index. Gives you a status caution, which means we're in risk off mode, basically. So you want to be short indices, long gold, basically. Well, gold doesn't seem to be going long at all, does it? That's because we've got a massive dollar move on at the minute. But yeah, anyway. Right, so yeah, DAX, nothing much to do today. Downside target on the DAX is going to be all the way down to the low of the week, which is 22,860. So if we do manage to get a range which is big enough to trade today, which we have now, and we break short, there's a long drop today. So 15-minute ORB is going to go in 2 minutes. So we'll look for a pullback and drop off the back of that. Previous session lows already been taken out. Previous close today, we're gap down open inside, I believe, today. No, we gap down open below today. So gap fill statistics 30%. So very low chance of the gap fill being completed, which is the previous close fill. So there's only a 30% chance of that, which means we are bear stance today. 59% probability of taking both sides of the 5-minute ORB out, which we haven't done yet. So there is a 60% chance of a push back up into propulsion here today. So we could look for a long and then obviously take a break short later on in the day, but we'll see what the 15-minute statistics come out as. Let's see if there's anything decent. I might as well just look at the summary, it's easier. Sorry, the overview. So low chance of gap fill, M5 bearish, no IB. Nothing really statistically amazing to look at really today on the DAX. So we'll see where we go. 40 seconds left. Morning watch check. Not from the beginning. You turned off all or just part of it. You're talking about the oil trade, yeah, partial. Morning sleepy. Yeah, so just partial on oil. Still in. I saw a post yesterday. Obviously, I've been keeping a very close eye on every single missile that launches anywhere near the Strait of Hormuz. Saw a post yesterday on this move and the fundamentals behind this move compared to the fundamentals behind the Ukraine move. Yeah, as you can see, we're twice the size of the Ukraine spike at the minute. But we had a run up in Ukraine. We kind of knew it was coming, didn't we? We had that period of 3 or 4 weeks before the invasion where we were like, you don't stick all your troops along the border and pretend you're playing games with Belarus. They're doing something. So there was a massive risk off for weeks before that happened. With this one, we didn't get that build up. So this spike is twice as big. The main difference between this one and this one is this was supplied to Europe. This is supplied to the entire world. 35% of world oil cannot go anywhere. And we've blown a shitload of it up. Every country's got 85 to 90 days storage availability for oil, obviously, which we had the meeting for this week, and they released that. That was all factored in. So this oil sort of easing, if you like, where we're releasing 400 million additional barrels everywhere, was all factored in to this move. So this is why the markets went, yeah, whatever, when they announced that, where everyone was expecting the oil price to come down. They knew that they were going to do emergency measures. This is all factored in. So the 130 level that we saw, which was that previous high, if this carries on for, the estimate was another 2 weeks where the Strait is basically a no-go zone, we will get to the point of no return where you get this kind of curve of right now it's bad, but we're okay. You'll get to this point in a couple of weeks' time where we move like this, and the ability for us to sort of regenerate stocks quick enough to bring that oil price down goes. And it's a point, I can't remember what they called it, but it's a point basically in 2 weeks' time where, because the infrastructure has been blown up so much, oil production has been completely turned off for a period of time, and the storages are completely full that are being hit. There becomes this point where it cannot recover. And the only thing that can happen is a protracted rebuilding process, which will send oil through to $150 to $200 a barrel very easily and very quickly. Think gold, yeah? The speed at which that move, if it continues, will happen, will be equivalent to the gold spike. Yeah, literally within a week or two, you will have done a larger move than has ever happened in the history of the symbol. Yeah. Also, we've got that added problem, if you like, of Trump saying him and his cronies are going to intervene in the futures market of oil. Quite how they are going to intervene to bring oil price down, I guess there's some way of selling a shed load of futures in oil that will drive the price down. But I mean, there's not going to be any shortage of people wanting to buy that contract, is there? But how they will unravel that contract, I really don't understand. So there is this, Trump intervening in the futures market thing, which could potentially drive it down. But I think the most likely event happening in the futures market is a control where they will just basically pick a price and they will continuously sell that price. So what you'll get is an iceberg order placed in the market with $250 billion in it or something, which means that everybody that gets there just cannot get through the iceberg. I think that's probably what they are meaning by an intervention rather than a drive down, but we'll see. I've got 225% of ADR headroom at the minute, so I don't give a monkey's what they do, really. For them to drive it 225% of ADR down, don't forget that was one of the biggest days in history. Yeah, it's dwarfed, isn't it, by that? But that move there was exponentially larger than any day we've had for a long time in oil. Yeah, look at the size of that candle. Yeah, compared to normal oil price. Look how insignificant that day looks compared to that. Yeah, if that entire day, which is the biggest day we've had for decades, happens again, I couldn't give a monkey's because it's nowhere near my break even at the moment. So holding for the long term, as safe as you can possibly be with a trade that's sitting there in 30 grand. Anyway, we'll see what happens. Wouldn't it be illegal for Americans to manipulate the oil price like that? Yes. You do realise they have a criminal in charge of the country. Do you think he worries about law? Illegal tariffs, kidnapping other world leaders, complete manipulation of markets based on what he says in news feeds, telling everybody to buy and sell before he says it. Do you think he really gives a monkey's about manipulating their oil prices? The guy's a convicted criminal and they put him in charge of the most powerful country, second most powerful country, China, on the planet. He don't care. Are the limits in place to stop one person from trading so many positions? No. You have to every commercial transaction that happens in the futures market has to go through the CFTC, Commodity and Futures Trading Commission. So every institution logs every trade with the CFTC, which is what we get every week, which is called the COT report, the Commitment of Traders report. So we can see every transaction that goes through COT. I don't know the legalities of limits. I don't really get into that area. But yeah, I mean, there will be probably some kind of limitation. But we're talking about a central government intervention. So I don't know whether or not that's something they would worry about. I don't know. No idea. But futures have a central exchange. Yeah. So CFTC will log everything. So don't forget as well, within futures, and this is why I don't think they can do that in futures, because don't forget, a contract in futures requires two parties. Yeah. So if I want to buy a contract, someone needs to sell me a contract. And if someone wants to sell a contract, there's got to be someone to buy the contract. Yeah. At the moment, the market is buying the crap out of oil. So if you wanted to do a massive sell contract, you've got no problem. You've got to hold those contracts to be able to sell them, though. Yeah. You can't just go, I want to sell a load of contracts, because you haven't got any. So I don't know how it works with the stockpiling of contracts for oil futures with central governments and that sort of things, but they could use banks to do it, because banks obviously have got futures contracts. I don't know. I don't know how it will work, but it makes more sense to me that you put an absorption order in where every person that comes to buy it just gets absorbed. Yeah. You can see the absorption orders. If you've got a piece of software like Bootcamp or something, you can see the orders in the market. So I don't know. I don't care. I don't think that's going to hold at all. I think that's going to get taken out. Iran have made no bones about it, have they? It doesn't matter what Trump says, this is going to be over soon. They're nearly dead. They're nearly destroyed. We've got everything. They haven't got a chance. Yeah, they blew up 4 ships in the Strait of Hormuz yesterday. Yeah, they ain't stopping. They have said in no uncertain terms, we have absolutely no qualms about destroying the world economy by strangling the supply of everything that everybody needs, which is oil. Yeah, you try and stop us, basically, is what their stance is. And Trump's like, don't worry, the war's going to be over in a couple of days. It's not going to be over in a couple of days. They've got bloody jet skis all up the sides of the Strait of Hormuz, loaded with bombs, basically. Yeah, if you have an idiot who is on a jet ski with a load of bombs straight towards an oil tanker, you ain't going to intercept that. You're not going to have time to intercept it for a start. That thing will be on that oil tanker before anybody can do anything about it. You cannot stop it. They say they haven't mined the Strait of Hormuz. Yeah, Trump says he didn't do anything wrong when he got elected into office. All lies, isn't it? So you can't trust anybody, you can't trust anything. But what we do know is that strait is not opening unless Iran says you can go through it. So there is some oil getting through it, but it's Iranian. So, you know, I don't know what's going to happen with it, but all I know is I'm not selling it. That's the only thing you need to know at the moment. Short on the DAX, and this is just about 15% ADR today. So downside target, obviously, we're looking low of the week, which is back to Monday, which was the gap down day. We're at a kind of support resistance area here, which has been tested a few times. So there is a possibility that we may get some of the buyers that broke that level and rebought it coming back into the market on the DAX. But obviously, we are, we're not looking long-term bullish, are we, at all at the moment? So I think there's more chance of a breakdown than a break up, but there is a 56 or whatever it was percent chance, 59% chance of retesting that high today. So just be aware of that. 15-minute candle isn't in yet. Is a refresh not working on this? Refresh isn't working. Nix, you need to fix the refresh on the website. You broke it. Right, so the 15-minute ORB statistics today, there is a 50-50 chance of breaking both sides of that. So we've broken short. There's a 50% chance that we'll break that high as well. So 31% of days breakdown only on the 15-minute ORB when we are gap down, open below. And there's very little chance of that gap fill. So yeah, definitely bearish today, but we'll see. Right. FX wise, I haven't been paying a lot of attention to FX apart from getting out of some positions. So pound New Zealand I exited this morning. This actually only shows a couple of aggressive drawdown control trades, which isn't all my aggressives on my other account, but I'm out flat on pound New Zealand. That spike up, I didn't see this. This weekly high, I knew we were testing it yesterday. I didn't actually look at the charts after in the evening, basically. So we actually closed up above that weekly, last week's high. This morning, we had a beautiful spike up. So that got me out just over 1%. Actually about 0.8% or something. So I'm out. I'm flat on pound New Zealand. Euro odd, I'm still underwater on this at the moment. I haven't got my aggressives on here either. I've taken some losses on this one. I couldn't get out of it. Luckily, because obviously oil trade, I've managed to take some losses and survive and be happy. But needed the oil trade. Aussie US, I'm so close to an exit on. So retesting this low will get me out of this. We need 150 ADR today. So we've got news all afternoon at 12:30. Say all afternoon at 12:30. We've got news at 12:30. We've got GDP for the dollar. And we've got PCE. So there's high impact news coming out this afternoon. If we can get a rally on that dollar this afternoon, I'll be out of Aussie US as well. We've got Canadian unemployment as well. There it is. That is forecast to go up. Not going well for Canada at the moment. As you can see, we're on a steady incline with unemployment, although it has kind of stabilized in the last couple of quarters. So I'm hoping, and it's still going the right way, that I can get that exit down here today. So if we can take out 125 ADR, that puts me flat on that. And then I'm out of all of these, well, all but one of these horrible squeezes we've had on these Australian pairs. So if you are still in these, obviously, if you're in a bad way, your average will probably be about 200, 250% of ADR. So a retest of last month's low will get you out. Basically, we'll look at the monthly in a minute, but you know, the number of bullish weeks and months we've had is unbelievable on this Australian. That area there is what you want to be watching. So this double propulsion fill to the downside, potentially for a range to form. The range could also form out of last month's low as well. So we want to watch that area. But yeah, it's doing really, really nicely. The unwinding of this Australian move. It stalled out. We tried to get a new high in there and it's failed basically this week. So if you look at it on the weekly, it's a absolutely beautiful rejection. So we are coming off the back of, I mean, these are bull weeks, although they're not really, are they? But 1, 2, 3, 4, 5, 6 weeks straight up. Then we had that rejection candle put in. Obviously, when the conflict kicked off, we've attempted to continue the highs and totally failing this week. So although this is a higher high and a higher low, it's a massive upside bull rejection followed by an upside bull rejection. So they really tried hard to continue this move and failed. So the obvious thing to do next is to come down and retest support. That is last month's support there, which is the low of the previous week as well. And if that low breaks this propulsion gap, you can't see this propulsion gap, but there's a whacking great, obviously, propulsion gap here. Yeah, that is where the buyers are sitting. So if we can break through that, we will probably find support in here somewhere, which makes me think we might form a range here, or we will just come refill that propulsion gap, form a range down there somewhere. So it's looking really good for shorts at the moment. But we've got to break this weekly level as well. So, we're not there yet on this, but it's getting there. If that goes, we're going to test monthly. And that should be enough for a lot of people that have taken aggressive drawdown control positions like me to be able to get out of it. Not looking to get out of it with any money, just looking to get out of it. It's a horrible, horrible trade, the Australian. It's stuffed a lot of people, me included. Aussie New Zealand is stuck as well still. This thing does not want to stop. Look at it. It just doesn't want to stop. If you look at the Aussie New Zealand on a daily chart, this parabolic move, which obviously did a 61.8 or 71.9 retracement, all these parabolic moves, when we get them, they always do a 31 or a 50 most of the time. This one, we got a much bigger retracement on it. This move here, we've not seen anything like that. You've got to go back a long way to find a move of that magnitude on Aussie New Zealand. This thing has squeezed me horribly in the past. But, whoops. If you go back and look at other points in time and look for a move of that size, that's smaller, way smaller, that big parabolic move there. We got a parabolic move to the downside there, way smaller. That one's smaller. You got one here, look, almost exactly to the pip, the size of the move that we've just had. It just happened a little bit quicker. And again, look at the retracement, 50%. So this does look like the start of the retracement. We haven't had moves of that size. We had this obviously massive move down in the 2012 crash, but yeah. So when you compare the size of this move, obviously, which is this block on the screen now, to history, we've had one move of that magnitude in the last decade, and look at how it fizzled out. We took out that high there, and it just basically pop accumulation for 3 or 4 months, and then it dropped. So it looks like this is the start of that move. Hopefully, we will see. But yeah, you're going to be looking at a pullback to at least the 24 MA, if not the 72. So monthly, quarterly pullback. That box, don't need it. So if you look at this, potentially when this exhaustion move starts, as soon as you see that first bear candle go in, if you're not on aggressives on it already, get on aggressives. 24.72 will be your first call, and that is probably what will happen, is we'll come into some kind of accumulation up here. But that move there is like 400% of ADR, easy exit. But if you could hold it for the next couple of months, you'll be seeing good retracement on that, I think. But we'll wait and see. All these Aussies are nasty, aren't they? Aussie yen, we've just put in another down day today. Aussie Swiss, so yesterday we had an inside bar. And we are inside bar on that control candle at the moment. So yeah, again, should be coming back to the 24, which gives you 150 ADR. I don't think many people are in that one, Aussie Swiss. Aussie CAD, you've had a very nice sort of 200% ADR pullback on that one already. But we'll see. We'll see where these all go. All the time that we've got strength in gold, which does seem to have petered out now, we're going to get strength in the Australian dollar. So it's a commodity pair. We are starting now, as you can see, to look like we, after that propulsion move, which held, we are starting to look like we are going to start to drop on gold. So be looking at a 2-week low test as the first, or sorry, 3-week low test as the first port of call on the way back. But, you know, this thing could easily just sit around. Don't forget the dollar as well is obviously a contributing factor to this. We've got a very strong dollar at the minute. Let's see. Let's go oil. Right, DAX. Pulling back up inside the 5-minute range. So coming up to potentially retest the open. We've already got a 50% retracement in place. So market structure wise could be a good sell opportunity there. ADRs and RSIs. I mean, the RSIs at the moment you can just kind of forget. Sorry, ADRs, you can just kind of forget anything to do with commodities and things at the moment. Euro yen, we've got an ADR today. Blimey, is this money coming into the yen? Yeah, yen strength this morning. A couple of ADRs, yeah, on the yen. So pound yen, euro yen, European markets down. We've had France. We've had 6 French soldiers hit and hurt in by Iran. So very slowly but very surely dragging Europe and NATO into this conflict as well. It's basically World War III kicking off, isn't it? Yeah, and the Europeans coming out this morning and saying we are very aware that Trump wants to split Europe in two, which, you know, is not really difficult, Russia and everything, but yeah, the Europeans very unhappy with this whole situation. So markets down at the moment in Europe as well. It's very difficult to know what the hell's going to go on next, but Euro yen, New Zealand yen, both ADRs. So you've got potential pullback opportunities off of these. Drop down M5. You've probably had reversal alerts on them already this morning. Yeah, but literally just gone in the reverse alert on that one. So yeah, potential reversal on that one. Euro as well. Obviously, don't target too much. That's miles away, the reversal on that. You can't get into that very easily because it's too bearish. In fact, I'd be watching that for continuation short this morning. Pound US dollar also has hit, and euro US dollar because of the strength in this dollar. So we're 150 ADR on the pound. Sorry, I've got this set. So I've got my ADR indicator on here set to ADR 3 because I've been monitoring oil and I wanted to see what the 3-day ranges are rather than the 10-day ranges. But yeah, ADR 10 we've exceeded on euro US dollar. The 3-day range we're way bigger, but yeah, reverse alerts just gone in on pound US dollar. And euro's a while away. RSIs, there's loads of RSIs at the moment. It's a bit of a minefield and a bit of a mess at the moment. But if you look at these dailies, obviously the dailies are to get extended beyond the 80-20 levels on the dailies is not rare, but it's hard to do. You need something fundamentally big to kick off below those levels. So we've got things like the Euro odd at the moment, which I know all about because I'm in it, stuck, horribly stuck in it. We are down to levels that you haven't seen before. We have seen once, but that was back in 2022. So back down here. We're at, obviously this is to do with gold and obviously everything oil, but we are absolutely exhausted. The distance away from the 72 moving average now is absolutely huge. So if you compare it back to when we were here, yeah, which is that low there, we had a 50% retracement. As always, same thing plays out over and over again. So we're looking at a push back up roughly into 171, which is this previous high here, this accumulation here before the breakout to the upside. So that is where you're looking at for upside target potentially on it. I will be out way before that. But that's where potentially we're going on this one. These levels, if you do a back test with the position trader EA or with any EA that trades RSI basically, and you look at the 80-20 levels, they're incredibly reliable. The 90-10s, you don't hit them, once every year or every couple of years you'll hit them, but they're 100% strike rate. Yeah, it never, ever, ever doesn't start a massive retracement off the back of a 90-10 extension. It's just market physically cannot sustain those levels. Yeah, it is unsustainable because there is no liquidity left in the market. Yeah, there is nobody left underwater that can take any more on. So the other side of the order flow dries up and there's nothing you can do to push it any further. That's when you get the exhaustion moves where we suddenly see a spike where they eat all the liquidity and there's none left. And then it comes back down again because there's nothing you can do. You can't stay up there. And then we get that reversal starting. So these levels, we don't very rarely get down below the 10s. Yeah, if you want a decent trade right now, that's it. Yeah. And it's just kicked off with a 4-hour reversal alert. So you could literally press the button there and you're pretty safe with a stop under there. And, you've got a massive risk reward ratio on that if it kicks off back up into the accumulation I just looked at. So loads and loads and loads of room on that, on the reversal. But yeah, I mean, those levels are massive. We've got loads of dailies which are at those levels. On the 4 hours, everything's starting to play out. US dollar Swiss is your biggest 4-hour extension at the moment. That's again above that 80 level. So yeah, very, very, very strong probability of a pullback from that level. Yeah. So lovely short opportunity US dollar Swiss today. So watch that on lower time frames. See if you can get some indications of reversal alert coming in. Literally just had a reversal alert on the 5-minute there. So watch for potential retest. 15-minute, you've got a little bit more distance to go to get that 15-minute reversal in. But yeah, that's your first bear candle gone in today. But that US dollar is really strong at the moment. These markets are totally, I always say it, the markets are irrational. They're always irrational, but at the moment they're even more irrational than normal. Everyone's piling money into the dollar. Yeah. He's running up a bill like you've never seen. Yeah. $1 billion a day to wage war. $1 billion a day. Yeah. We're now, what, $15 billion in? $14 billion? I don't know how many days it's been going on. But we're over $10 billion into war. Yeah. And it could go on for another couple of weeks. Another $15 billion. Yeah. Why is everyone buying the dollar? Right? They're in debt. They've nearly defaulted on their debt and gone bankrupt a couple of times in the last couple of years. And they're spending more money today than they could possibly get back into their country. They've also had their tariffs made illegal, which means that they've got to pay back all those tariffs. They're about to have the biggest bill they've ever seen in decades land on their doorstep. I don't get it. Why is the market buying a dollar? It doesn't make any sense whatsoever at the minute. Maybe because obviously they've got 400 million barrels of oil in excess. And what do we need right now? Oil. Yeah. Oil price. So yes, they are going to make some money out of oil. But when that oil stock is gone and when this problem is sorted, they're going to be left with a massive bill. I don't get why we're buying the dollar at the minute. It doesn't make any sense to me. Long term, it's not doing well, is it, the dollar? So obviously it will be against the yen. But yeah, I don't know. It's absolutely bizarre. But I wouldn't be a buyer necessarily of the dollar at the minute. But anyway, we will see. Euro order is a sure thing? No, nothing's a sure thing. This is trading. Nothing is a sure thing, ever. But if you want a high probability setup, yeah, don't take my word for it. I know nothing. Yeah, if I knew which way the market was going and when the market was going there, I'd be a billionaire and I wouldn't be sitting here on YouTube, right? But all you can do in trading is go back and look at history, right? How many times have we had a relative strength move of this magnitude on this particular symbol? Apart from today, we've had one there. What happened? It pulled back 50% within a month. Yeah. Go back in history and find another one. That one there wasn't as deep as we are at the moment. It was close, but it pulled back 50% of that leg. And you'll also find that that is probably a 38 retracement on the previous 2-month leg, 3-month leg. Yeah. So, a third of the previous or 50% of the one before that. There's one there. That leg there, 38 retracement. Yeah. Always look, worst case scenario, 38 retracement continuation or 38 retracement accumulation. Best case scenario, 61.8 retracement continuation or average 50% retracement. Yeah. So if you target the very, very worst thing that can happen and it only retraces 38% of the leg that it's just put in, that's your worst case scenario. That's enough to get a 510R out of most moves that get down to this level. Yeah. Go back in history. Yeah. It's all we've got to go on, isn't it? Yeah. You don't have any other tool to use in your toolbox at all. Yeah. And this is 2 months. It's not, this isn't a short term thing. You're going to be holding this for weeks. Like my oil trade. I've been holding my oil trade for a week already, paying dividends. Yeah. These high time frames is what institutions trade. Yeah. You won't find any institution looking at 5-minute charts or 10-minute charts or 15-minute charts, hourly charts, maybe, but 4-hour daily charts is where institutions trade because they don't want order flow, algorithmic chop. It's pointless, isn't it? The $7 trillion a day goes through this market at random. There's no way on any time frame lower than daily time frames you can speculate a pattern. It doesn't happen, does it? Yeah, there's no repeating patterns on low time frames. Going back and look in history at every single day that's happened and try and find 2 days the same. There isn't one. Challenge you. Go on, I'll give you £1 million if you can find me 2 days that are identical on a symbol in a decade. There isn't any because it doesn't happen. Because order flow is random, institutional market movement that changes minute by minute. So there's never 2 minutes that are the same in the same sequence. So this is where institutions play mean reversion, which is why it works, because it's not a fact that the banks are buying here because it's come down. It's a fact the banks cannot sell anymore because no one is willing to buy it. Yeah. It's not a case of this is where they take their entries. This is where they cannot continue the move. Yeah. So they have to take profit. And as they take profit, other institutions see opportunity to buy into the profit because they know that these guys have got to get out of a good 30, 50 or 60% of that profit they've generated. Therefore, they know when they get in how much movement they've got ahead of them. And then they will either hit a brick wall because the fundamentals mean we need to continue the move, or the fundamentals have shifted and we will come back. It doesn't matter which it is. What matters is you know that there's a movement coming. That's what mean reversion is about, isn't it? We wait for the move to predict the move. If you're trying to get in and predict the move here, you're never going to do it because it looks like it's starting and it fails, and it looks like it's starting and it fails, and it looks like it's starting and it fails. And this is why trend traders never make any money, because you give back 99% of your profits trying to get into that. And by the time you've got into that, you've lost 7 times. You need a 7R just to break even. Doesn't work. Not in retail, because we can't move the market. They can. They know damn well what's going to happen in the next month because they are making it move. If you had $7 trillion in your bank account and every time you pressed the button you knew you could get a candle in a direction, what would you do? Use that information to make money like everybody else? Or would you not? You're a bank. Come on. How it works. So yeah, it's not a given. It's not a sure thing. But historically, it's incredibly high probability. Flip it on its head and look at the inverse. Look at the 90 levels on the upside. Yeah. Yeah. Just about a 38. Just about. There's one there as well. I mean, you can't really... I mean, mathematically it is, but this is COVID, isn't it? Yeah, but look what happens on COVID. I mean, obviously COVID undid itself. You can't use that as an example. But yeah, but do your due diligence. These are unsustainable levels. That's a massive leg, isn't it? But that's your extension there. That's only a 38 retracement. Yeah, so always look at the worst case scenario. If you're always trading to the worst case scenario, in fact, it didn't even quite make 38, did it? Depends where you class the move from. You can always make it make a 38. There you go. So that is exactly a 38. But that's because I've put the fib there. Put the fib really where the move started from. That's your 38 retracement off of that extension there. Where is that extension? It's there, isn't it? So you got that leg pulled back there, then it continued up into there, didn't it? So actually, that's the wrong measurement. That's your measurement. Yeah, so that one actually didn't, did it? Look, that only gave you 23 retracement. Did you make money out of a 23 retracement? Probably. You got one there that didn't work as well. So to the upside, it's less successful. But then, 2 months later, you're out with a 50% retracement, aren't you? Obviously, if you, I'm assuming you're position trading and you're not using those silly stop loss things. But if you use silly stop loss things, you will get stopped out. But equally, that's a very high probability trade with a very high risk reward. You get into that right now, you're looking at one 5R just over. Pretty good. Haven't got stopped out on the DAX. So propulsion, that's pre-markets, is not real. But yeah, the open, we're back up trading at the open again. So that 50% probability of taking out both sides may well play out. In which case we're going to trigger a long, which I don't really want to do. But anyway, might be a choppy session today by the looks of things. So selling that high is probably not a bad idea today. ORB obviously would be playing the previous close. See the partial target up there. That would be, well, disconnection. What's going on? That would be target to the upside, previous close. Bad day yesterday as well. What's going on? Why can't I flick? There we go. My 4-hour and daily RSI 10 on EuroOdd didn't get close to RSI 10, only hit 20. What could account for the difference? You'll have a different RSI maybe? Don't know. Don't know, different RSI maybe. I'm using the median 10. Maybe you're using close 10. Get completely different readings on close 10 than you will on median 10. New Zealand dollar, US dollar. It's ADR hit today. Actually, no, that's an ADR 3 hit today. My terminal was really slow this morning, really laggy. Right. Yeah, so just broken down. So we're just filling all these propulsion gaps to the downside at the moment. Loads of upside targets here to come back up into. But again, as I say, it's US dollar strength at the moment. So watch. Uh, 150 ADR. This is 3 ADR 3, but that level there. Potentially downside today, you're going to find a bounce off of that. Maybe even back down into here. But yeah, nicely extended on the hourly. So potential for a pullback on that. It's already pulling back. Reverse alert's already gone in and it's retested propulsion. Nice little accumulation there. So a bit of US dollar weakness coming in by the looks of things. That might be New Zealand strength. Yeah, it's New Zealand strength. Look. So Aussie New Zealand will have a reversal alert on it as well. $15-minute. Probably going to get an hourly. Oh, not quite. Again, lovely accumulation day on the Aussie New Zealand yesterday. But yeah, New Zealand US, depends what time frame you're trading on, but very extended on all of them. Look. Again, 20, 80, 20 into propulsion. We'll push back up into here. Or into that propulsion gap there, potentially. But this is the break of that high and retested and added. So this is the first retest of this area, but this is like 6 weeks old. So likelihood is anybody that was in long here is out up at the monthlies. Actually, that is the monthly high that was created there, isn't it? Is that a month? That's month 2 high. Yeah, so that is month 2 high. So that was the high of last month, the month before last. Watch that area there. This is a good area for a long. Definitely a good area for a long. Yeah, so I've got aggressive on Euro odd. Yeah. It's the only thing I'm left in. I've stopped out. I've stopped out on loads of it. You can see this is when I started. You can see back here, I didn't take all the trades on this account. I really must just use one account in here. But that was the start of the aggressive drawdown controls. As you can see, I stopped out on the first attempt there. I had stopped out on aggressives here and I stopped out on aggressives here. So I'm in aggressive again down here, but I've also scaled out of some. I've taken a loss on it because of oil. Oil's allowed me to take a loss on other stuff. I'm trying to get myself flat. So basically yesterday I restarted development of the position trader version 3 EA. So I'm going to post in the group this morning any new features and functionality for the position trader that people might want, because I'm recoding it from the ground up, mainly to stop these issues with MT5, because the way I've coded it in the past, it is less robust to changes that MetaTrader make with MetaTrader 5. So I'm recoding it basically in a much more thorough way, getting Nix to help me do it. It's going to be a lot faster and leaner in its code, the way that I'm going to code it. So, or I've started it already, actually. I've got it. Actually, I haven't even tested it. So one of the things I'm going to put in is different types of scaling mechanisms. So some people want to scale in after a certain number of trades or up to a certain number of trades. So I'm going to build that in so that can all be tested. So I'm going to test lots of different drawdown control techniques, all sorts of stuff in the new version. It's going to have maximum currency exposure settings in it, which I'm going to add. So I'm going to add lots of things basically into the new version, which is being built at the minute. Can't even remember why I went onto that subject. No, don't know. And also adjusting the scaling distance based on number of trades. There's lots of things that I'm going to put into test, basically. So, morning outro. So that H4 RSI extension you can see there on the Euro odd. So that move started there. So your 38 retracement is all the way back up into there. That is more than I need to get out of this. I actually don't need much on this because I've taken losses on it. So I can't even remember where it is. I haven't got my terminal open at the moment. But yeah, it's also you want to watch that accumulation and then that break. So whenever you're looking for where moves started from, if you look for propulsion gaps will always be your clue as to where the move started, because that is the large orders going in. So you can see that we had a 2-day accumulation there. Then we had propulsion moves, which is where that move started. So 38 retracement on that leg is there. But I mean, this whole thing hasn't had a pullback on it, has it? Really, since that pulled back 50%. So since that move there, on it, but there's a 50% retracement. This whole thing, we've had no retracement on it whatsoever. So that's the leg I think we're going to retrace from this extension. And that's what I've been trying to get into, since here. And it's just run me over every time. Does that. Did I sleep well last night? I did. Yes. Had the holiday conversation last night. Yes. Out of a partial, but still in. I'm out and in. It's amazing how the thing that was doing my head in about this trade was not so much the fact that it was fluctuating. Price was unstable. The whole situation is unstable. You have no idea where anything's going in this type of thing at all. But it was the fact that every time I looked at this, it changed from like 30 to 25 to 22 to 32 to 27. And, in a candle, it's too much movement, too much money. And I've said this before in the previous version of the Bootcamp. I think I said I did a session about this. When I used to trade big accounts, sort of 200k, 500k, the psychological part of trading takes over completely, because every candlestick is a car, or every day is 6 months of mortgage. Mentally, it's almost impossible to not attach tangible assets to price movement at that sort of price point. And I feel the same even at this level. I'm looking at that and going, last holiday I went on was 10 grand. Yeah. if this pushes from here to here, that is half of that holiday. You can't help it. You suddenly start equating price movement with, oh, I could buy this, I could buy that, I could do this, I could do that, I could get rid of that. You know, all this sort of stuff. Like I just bought a car recently and bought it on finance because it's easier to do than dump capital. But I could pay the car off. Yeah, if this moves from there to there, the car's paid off. It's that sort of thing that you think in your head. And that's what was doing my head in about it over the last couple of days, was the fact that I was just watching this thing moving too fast up and down. And it's because of the expansion in price. You see the normal price action. Yeah. And the price action suddenly is doing this. So where I entered back here and that sort of movement was normal, what I have been seeing over the last 2 days is huge swings in the P&L that I wasn't anticipating from that. And that's the thing that psychologically I couldn't hack anymore. So I thought, screw it. And the fact that, you know, up here we were looking at, well, obviously 3 times the amount of money because it was 3 times the distance. But yeah, slept well. In fact, I didn't actually sleep badly here because I haven't lost anything. I never had any risk on this. If you look at where I got in, my entries back here, second day, and after second day pullback, I never had any risk on. I added size here, and as soon as I added size, it pushed off. That was it. So I had like a couple of days where I was like, oh, this could go really badly. And there was never more than 2.5 grand on the line to suddenly, holy crap. The risk reward on this trade was that. So it got to 8R. Doesn't sound like a lot, does it? This is the thing, you know, you think about when you hear people in trend trading, trend traders going, oh yeah, I'm just waiting for that 5R, that 10R trade. Yeah, this was only 8R. This is the biggest move in history on this on this symbol. This was only an 8R trade. Yeah, go and find me a trend trader that actually makes money. To get into a trade like this, you're going to have to take 20 trades, 10 trades, even 5 trades that don't work out. And to get rewarded with one 8R trade, you're going to make 3R return on it after getting screwed over 5 times. Mean reversion, in, out, done, 1.5R. Very high strike rate, over 50%. I don't know why people bother trying to trade trends. It's the most difficult thing to do, and it's not rewarding at all. It is rewarding long term, but psychologically, you can't handle it. You can't handle the trend. No one can. Horrible way to trade. Okay, stopped out on the short, broken long. So there's that 50% statistic that I spoke about on EdgeStat, just played out. 50% of days that are gap down below with roughly a similar size, stop out both sides. Why is that not reloading? The auto refresh is broken on this. So 30-minute range breaks both sides 36% of the time, 36% breakdown. Hourly, which we are now in, 42% break both, 42% breakdown. So we are definitely bearish today. So there is a high probability of a short play today, which means a stop out on both sides, unfortunately, today for the ORB. But if you want to short it, this is a great short because the chances of getting there are only 30%. Still 30% chance of getting there, yeah. So, but there's a 70% probability of that, and there's a 42% probability of a short today. Let's quickly look at the hourly stats on that as well. So first hour candle is bullish, 138 points. Is high probability of a continuation as well. Really mixed statistics today. Really mixed. 13.7 point EV and 39 average reversal. So there's no edges today, is there? Just bleh. I'd be more bear than bull, really. Did you code that risk reward tool? Yeah. There. It's great for scalping. So I use it to scalp basically. Just works out your risk reward. So just basically, if ever you see, like, let's say, for example, I'm thinking this is bearish from here, but just in case it isn't, and we are just going to bounce out of propulsion. Yeah. If I short this with a stop above the high, is it worth taking? That's literally all this tool's for. Obviously, it places the order, does your break evens, partials, everything else it does. But it's mainly so you can go, is it worth taking this trade with that sort of risk? Yeah. Clicking on an exponential moving average underneath it. But yeah, that's basically what it's for. So it's just a standard risk reward tool. You can use market orders where it will track price, or you can use pending orders. So you can say, I want to place a pending order if we break that low with a high above that candle, because that gives me a decent risk reward. If you execute that, I just place the pending order. Or if you have it in market mode, it will just basically place the order at that price right now. It's got loads of other little cool features in it, but there's loads of inputs in there. You can adjust everything, all the defaults, all the colors, usual stuff. And it works in the tester. So you can do everything you can do in here in the tester as well. So you can use this in the tester for actually taking trades, working out risk reward ratios. So if you've got a strategy that you manually trade, you can practice with this in the tester. In MT4, not in MT5, because MT5 is shit. Not sure the validity, but it was quoted via Financial Juice Squawk. What was? Not sure of the validity, but it was quoted via Financial Juice Squawk. What was? Did you post something that hasn't come up in the chat or something? Trump claimed in G7 that Iran is about to surrender. No, they're not. They're not surrendering. They're blowing ships up, Trump. I don't get it. This bloke's off his head, isn't he? He's absolutely off his head. You'll know it basically. If it's over, that'll happen. Because the Strait of Hormuz will open, basically. But I still don't see this going anywhere but there. You know, even if it does pull back, if you look at the structure we've got here now, yeah, like that, and then go back and look at what happened in Russia. almost identical, except we got 100% retracement. But then what did we do? We pushed again. We pulled back. We never broke that low. Accumulated, and then we pushed again. Yeah, because this is the panic, this is the solution, and this is the long-term impact. Yeah, the long-term impact of what we have right now is bigger than the long-term impact of Russia only being able to cut supply via Ukraine to Europe. Yeah, we've got Iran and the entire Gulf nations not supplying to the world. Exponentially larger problem than this was. Yeah, this was one pipeline. What we've got at the moment is an entire part of the continent of the world not being able to supply. That's that even if it retraces, it's not going down, is it? We've got a big problem. Big problem. Even if this is over, if it stops right now, there's a, like, I don't know how long it takes to build an oil refinery and build oil refinery storage tanks and all that sort of stuff. Most of them have been blown up. A load of ships blown up. There's a load of ships with oil. Right, Strait of Hormuz, that little bit of water, yeah, where you've got 1 billion boats here that can't get through and 1 billion boats in here that can't get through, yeah. When this lot all get out, they've got somewhere to put their oil. When this lot all come in, it's all blown up. Where are you going to put it? All the refineries are full and turned off because they can't pump, because they've got nothing to store in. Where are you going to put that? It's a massive, massive, massive problem. It's going to take months to figure out how to rectify this. And all that time, someone, somewhere, with a huge stockpile of oil, mentioning no names, Mr. Trump, is going to go, we got a load of it. Do you want it? Canada. We've got tons of the stuff. It's our biggest export. Do you want it? He's not stupid, is he? He's really not stupid, Trump. He knows exactly what he's doing. Also, what are all the buttons across the top of the chart? That is the ISLA indicator. So this is your index statistics, basically, for the DAX. So this tells you what the gap statistics are, tells you how often similar gaps form and what their fill rates are, how often they hit previous session levels, all that sort of stuff. So these buttons basically draw lines. So you see the previous close there. If I don't want to see the previous close, I can turn that off. There's the open. If I don't want the open, I can turn it off. Previous session levels, previous session low, previous daily low, last week's low. So it just basically draws all the levels on your chart. And if you're on a US, you'll have the Globex high and low as well, also drawn. You can turn off Globex as well. So it just basically turns, and it numbers the candles as well for you. So any of you that follow Al Brooks' stuff, you know, he uses candle numbering. So it does that as well. And you can turn that on and off. You can have odds, evens, or all sorts of stuff. But this is ISLA. Index statistics and session level analysis, basically, that stands for. Put that in the chat. Just gives you a statistical edge when you're trading indices. So, you know, it's like today. And all the levels off, look. And you can turn off the statistics panel as well if you just want to hide it away. So today we are gap down about 180 odd. The percentage of session average daily range is 45. The percentage of the average daily range is 38. Your average gap up and average gap down are usually 91 and 112. So this is a big gap compared to normal. So we know that we are further away from that gap than we normally are. When gap ups close 65% of the time, gaps down close 61% of the time. But when we have a similar gap of 15% either way of the size of today's gap, there's only been 7 of those in the last 100 days. You can change that statistic to whatever you want. And it shows you what the probabilities of those closing are. So your average gap closes around candle 35, and around 43% of gaps of a similar size will close. Yeah. So the other website, EdgeStat Pro, that I've got, this calculates statistics slightly differently, because this takes into account gap direction and open position and gap size. So it's a more refined calculation, basically. So out of 1,576 sessions, which is 5 years worth, there's only been 54 of a similar size and type. So you can basically analyze every single one of those 54 days to see what happened. And this gives you roughly the same statistics. Statistics are statistics. It's basically a case of if I'm going to go long, what are the odds of getting there? 43%. Yeah. So if I'm going to get there 43% of the time, what risk reward ratio do I need? You can work that out on here. Yeah. So my strike rate is going to be 43%. So if I get a risk reward ratio of 1 to 2, I can make money. If I can only find a 1.25 risk reward ratio, that trade's not worth taking. Yeah. So if I do my risk reward and that is a, 1 to 3 risk reward ratio, I could probably say, do you know what? I'll go with a 1 to 2. And I'll actually target something that's more likely to get hit. It's all to do with statistics. Everything in trading is about mathematics and statistics. This candle means nothing. The next candle will be that, or it will be that, with a 50% probability. That's it. Just because it's done that, everyone's going, oh, it's going to do that. No, it could equally do that, couldn't it? So there's two things at play here. We are either market structure short, or we have broken structure long. It's always 50%. So when you are taking a trade, you have to assume 50%, which means you need to have a positive R of 1.25 or 1.5 or something. And if the probabilities of getting there are 43% and you've got a 3R, that's a bloody good trade. If the probabilities of getting there are 20% and you haven't got more than a 1 to 5R, there's no point in taking the trade, is there? Because even if you took that trade 5 times, you're still only going to break even. So the mathematics doesn't work. So this is about helping you figure out the maths. Similar gaps and opens, only we've had 4 of them there. You can see they close 75% of the time, but there's only 4 to go on. So it's not a very big data set, is it? This is the trouble. When you look at it, the more more granular you go into analysis and statistics, the more difficult it gets to make those statistics work because you've got a tiny data set. I've only got 4 days here. Could be on a coin flip. I could flip heads 4 times in a row. Could be that those statistics that say 75% of those gaps are going to fill, it's just been lucky 3 times. Not enough data. So you need to work with big data sets. And this is kind of the problem with statistics is obviously you need bigger data sets. You can you can go for more data. So you can change the number of days back that you look somewhere. So if I go back 300 days, I don't know if I've got 300 days. Yeah, I have. There you go. So you can see statistically now I've got completely different data coming in. So that similar gap and open has actually happened 13 times in the last 300 days. So that's more than a year because of we don't have 7 sessions a week. But 62% of the time we do actually fill those when we have a similar gap and we open in a similar position. But then you look at that statistic there, similar gaps closed 38% of the time with the 15% variance. So we've got a bigger data set there to work with, and the statistics get worse. So if that was above 50% and that's above 50%, I'd say there's a very good chance if you can get 2R on that, you're probably going to make money long term. Just got to work the maths out, basically. Can I set the user to plot the 5-minute opening range? No. Doesn't do that. It's very easy to plot it though. You just basically draw a little line like that. Whoops. So that takes like 2 seconds. Don't be lazy. Right, there we go. So we're not having a big day at the moment on oil. I haven't really seen any massive news coming in this morning. French CPI is in, slightly down, inflation coming down in France. So yeah, not a massive day today. Hopefully we get another bull day, but you know, I think at the moment, while this is all going on, there's a probability of that sort of thing happening. I'm still suspended from trading on CFDs on oil at the moment with forex. I don't really need to take any more trades, but if you're not in oil at the moment, excuse me, there is obviously a weekend coming up. So you can see what happens potentially at weekends. So we may well get a weekend gap. Yeah. So there's the gap from previous week. Obviously, we know about that gap. Yeah. Wherever we close today, the gap is more likely to be up. If they decide, actually, we surrender, we give up, let's stop the war and open the Strait of Hormuz, there's a likelihood that we will gap down. So just bear in mind that you're open to 2 days worth of news with no way of doing anything if you enter into the markets today. Same goes for all FX pairs. If NATO get dragged into this over the weekend, the euro is going to get affected. The pound is going to get affected. So you just got to bear in mind at the minute, we are in a massively volatile situation. And there's a good chance that stuff is going to move erratically. So anything that you're in, obviously be prepared to take advantage of gaps on it if they happen. Gap fills, vast majority of the time will get filled. This is a bit of an anomaly, that one. But most gaps they will attempt to fill if they don't manage to get them filled. So Monday, watch for potential opportunities early on. Same with the indices. Obviously, they love to fill gaps. That's yesterday's close. We don't like being underwater, so we do try and tend to fill them. So just be aware. But obviously, I'm not going to take any more trades on this. This afternoon, if there's any members in here, I haven't got anything planned for this afternoon's members stream. I've got it in the calendar at 2:00. So actually, it should be in the calendar at 1:00 because we've moved forward. The trading's moved forward an hour. So I'm going to adjust that and bring it forward to 1:00 this afternoon. So it's 1:00 this afternoon, not 2:00. I'll change it and I will announce it in the members group in Discord. I'll put it in the main chat as well. But yeah, so it'll be 1:00 this afternoon. I'll change that in a minute. And obviously it'll be 1:00 next week as well. And then our clocks change the week after. So 1:00 this afternoon for members. And obviously we will do a little bit of an analysis on all the FX pairs and where we are with everything. But right now, as I say, everything's up in the air. Be aware, obviously, we got news coming out as well today, this afternoon at 12:30. So if you are looking for news trading opportunities, obviously have a look at those 12:30 spikes and see if there's anything can be faded or pushed from that. And then we'll be on at 1 o'clock and we'll do stuff from there. We'll have a look at what Nix has been up to as well. All right, so anything you need, let me know. I'll be in Discord or Telegram, but mainly in Discord. And I'm back on Monday afternoon for the New York session. And if you're a member, we'll be back this afternoon for New York, all right, at 1 o'clock. Okay, so I will see you then. Have a good day. Have a good weekend.
Click, clack, charts attack, candlesticks, they spark the track. Lead move silent, market crack. Profit stack, no turning back. Opening range, that's the game. Breakout hits, never the same. Algorithms play, but he rewires the frame. Banks whisper his name. Flipping forex, indices flex. Numbers dance, what's coming next? Green lights flash, P&L stretch. Risk managed, he never sweats. West fact buzzing, traders peep. Lessons deep, no time to sleep. Market's a beast, league at the leash. Feast at the feast, his game's elite. Market structures is domain. Leads the king, they know his name. Breakout sharp, he fuels the flame. Trading charts is not a game. Pip by pip, he stacking high. Mean reversion, banks comply. Leads the reason markets run. Leads the reason markets run. Candles lit, wicks on fire, spread so tight the stakes get higher. Institutional flow, he's the supplier. Positions held till charts retire. Data feeds, news he reads. Fibonacci maps the seeds. Supply demand his mind exceeds. Trades ignite like lightning speed. Stop loss tight, take profit wide. Leads precision, unmatched drive. Liquidity pools, banks coincide. Retail's blind, leads the guide. Charts unfold, the stories told. Entry bold, accounts in gold. Trade by trade, the wins are sold. Market alchemy, legends mode. Whoa, 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 whoa. Lead the reason markets run. Lead the reason markets run. Lead the reason markets run.
Lee wakes at dawn to a glowing screen. Charts and candles, the digital sheen. Open in range, his weapon so keen. He's the structured trader, a market machine. Bank